Welcome to the Kinvestor Report, where we sit down with analysts and industry experts to discuss the latest developments in the junior mining, commodities, and small cap stock market. I'm your host, Arlen Hanson. Please be aware of our disclaimer in the description below that no part of this interview should be taken as investment advice, and that Kin Communications may or may not be compensated by any of the companies discussed in today's interview. If we hold securities in the stocks mentioned, we will disclose. Today, I'm joined by Warren Irwin, founder, president, and chief investment officer of Rosseau Asset Management, a Toronto-based hedge fund specializing in natural resources. Warren, I want to dive into uranium because I've asked a lot of my guests over the last 6 months, what's the bear case? And I'm not getting any for the most part. And that scares me. When everyone's drinking the Kool-Aid, when everyone's saying this and saying that, like we're continuing to see more bullish news. Stocks aren't really moving, kind of.
Yeah.
Anyways, I know you got a bear case on uranium, so I kind of want to hear
it. Yeah, well, I haven't seen this much bullshit in any sector in a very long time. Maybe marijuana stocks, but the amount of bullshit flying around the uranium sector, I'm gagging on it. It's just crap. And it's like it's not a magical thing, right? There's tons of uranium out there, like lots and lots and lots. And I know where it is. And you want some, just give me some time. I'll build a mine and we'll get you as much uranium that you guys could choke on it, right? So people somehow think their magic of uranium. They're believing the BS hype, right? And here's how I'm looking at it right now. I was long up the wazoo NexGen when uranium was $17. We're up 5 times now, 5 times on the spot price of uranium, 5 times.
Yep.
And now you're super bullish. Are you guys idiots? Where were you at $17 when I was there saying you got to own uranium? But here we are 5 times the market value. I never go, remember last cycle, it was at 138. Yeah, big deal. I forget. I used to know the exact amount of pounds that traded at 138, but it was like a nanosecond.
1 pound.
It was like maybe it was a pretty small number of pounds. It might have been like 100,000 or 10,000 or some stupid number. But it was super small amount of pounds that traded at 138. So to have these stupid idiot CEOs of these uranium companies taking a super high tick last cycle, and cycles don't necessarily or don't represent previous. So you have a high tick of 130. Well, if you inflation adjust, we're at $200 a pound. So we're going to be at $200. Okay. But even let's assume the nonsense is true. We're going to go to 200 pounds, $200 a pound.
Yeah.
It's just a little better than a freaking double. Who cares?
From here. Yeah. Good point. Really
it's
good
a double.
point.
Okay, great.
And if you have no uranium in the ground, you still have no uranium in the ground.
And why are uranium stocks not performing? Why do you think?
Well, a lot of money got raised in this little cycle here with projects that really didn't deserve to get money raised for because of the hype. Then now that paper has to wash out.
And the smart money's moving out.
Yeah, smart money's moving out.
I remember when we were down at $17, I was telling anybody who would listen, I said, man, if I was a hedge fund, I'd go in and buy every piece of crap uranium stock there is right now. And then I'd squeeze the uranium market by playing this by jumping in to play the spot market. Well, the uranium market's this big, right? And then you got the spot market, a very small percentage of the uranium market. Well, I was around when the Hunt brothers tried to squeeze. I was a kid, but I watched the Hunt brothers try and squeeze the silver market. So I've seen squeezes before, right? Read up on the Hunt brothers squeezes the silver market and see how that turned out. So what's going on right now is a legal squeeze on uranium. They're going after this small segment of the uranium, which is the spot market. Who's doing it? You got Sprott. They bought 65 million pounds. Yellowcake, I forget what they're at, probably 25 million. I don't know if you know the number. And then you've got the big unknown, which is all the hedge funds at Converdine. And you want some insight into the amount of money, the amount of pounds that could have been bought on the spot market by hedge funds that nobody knows about. Well, take a look at MMCap. Just sold that big block to NexGen. What was it? 2 million pounds?
Yep.
Yeah, 2 million pounds. That's one little wee teeny weeny hedge fund compared to these big boys in the US. 2 million pounds. What are we talking? 30, 40 million pounds have been taken out of the market by hedge funds. So you add that to Sprott and Yellowcake, and you're focused on this very, very narrow segment of the uranium market, the spot market. The boys are trying to squeeze the market here, right? And let's assume, okay, 65 and let's say 25 at 65 for Sprott, 25 for yellow cake. That's not what, 90 million pounds?
Yep.
Yeah, 90 million pounds. And you just throw another 40 million pounds from hedge funds.
You got 100 million pounds kicking around there.
130 million pounds. 130 million pounds have been taken off the market in the very tight segment of it by speculators.
Yeah. We do have to remember that when you're buying in a tight market and you need to sell in a tight market, they go no bid. Right. So it also makes me nervous. I'm not picking on Lee at all, but like when I see development and exploration companies go out and put capital like that in regards to the commodity. Like there's so much risk. There's so much risk in building a mine.
That's what happens
currencies, you name it, environmental risk. And now so yeah, I'm not saying it was the wrong thing. I don't run the company. I didn't raise the billions of dollars. Okay, well you are. There you go.
Lee, buying that uranium was the wrong thing to do. You got to get focused on doing what you're supposed to do. Build a mine. You're not supposed to be focused on the Vancouver Canucks or the Formula One or speculating in uranium. Stick to what the plan is, which is build a mine. You know, it's tough enough to build a mine. Do you know how many juniors build world-class mines in the world? Virtually none.
None. Yeah,
none.
Very,
the only
few.
one I can think of. I've been in this business for decades. How many times have I seen a junior build a tier 1 mine?
Very rare.
Was Osisko was the only one I could think of. I'm sure there's others, but Osisko is the only one I could remember. You know, the story of Osisko is this. They were trading well into the teens, and it was clear there was M&A desire to buy them. And they said, you know, just say no. They told other investors, don't say no, say no. And so instead of selling for whatever number, it could $12, $14, whatever the number is, they ended up building the mine 5 years later, and they sold it, what, for $8? So there's not a strong precedence of, first of all, juniors should not be building mines. Juniors should have a good enough project that a major mining company will buy it, and the major mining company should build the mine. There is not a precedence of juniors building world-class mines. Juniors build a lot of crappy little mines, but as far as a big one, let's say like NexGen, they should not be building it, but they are. And then you have to ask the question, why are they building it? They should not be building it. And with Osisko, I remember giving the guys grief. I go, guys, why don't you just sell it? You don't want to be building a stupid mine, do you? Come on, sell it. They built the mine, and that was 5 years out of their lives. I don't know. I haven't talked to John or Sean about that, but you know, I was definitely egging them. Come on, guys, sell it. We'll go and have some fun with all the money we made. But nope, they built it, and I don't know, maybe they learned a ton. I'm sure they learned a lot about building mines, and I'm sure it'll serve them well in their careers. But you know, juniors generally don't build mines, and you know, here we go. NexGen's about to build the mine, and good luck. You know, they're not easy.
It's not an easy. I give my hats off to anyone that does, right? And it actually really broke my heart, this Victoria Gold mine collapse, because the media is going to take this and run with it, destroy them. And we all know the tenacity it takes to take something from discovery to production, right? Like it's big work.
Yeah.
So yeah.
So
yeah, I want to get into gold here quickly.
Sorry, you wanted my view on uranium. Do you want to talk more about uranium before we go to gold? Yeah.
Yep.
So you have everybody and their brother is trying to corner the market in uranium, and it's market manipulation, plain and simple, right? And so you've got, what we agreed, 130 million pounds have been taken out of the spot market. Well, demand for uranium, you know, I'm sure the numbers have changed, but let's say 180 million pounds or 190 million pounds. They've taken out 2/3 of the consumption in any 1 year. Yeah, over the last number of years. That's completely outrageous. Can you imagine if somebody did that in the copper market? It'd be crazy. And let alone, the copper market is the copper market. The copper market doesn't have this little wee spot part and the term part. What's going on in the uranium market is pretty outrageous. So anyways, you know, and let's look at supply and demand, okay? on the demand side, oh, they were going to get all these reactors built. Come on, kids. We've got a 450 reactor base right now.
Right. Pipeline.
They're old. They are old. 450 reactors have been built. They're in production. They're in service. They're getting old. They're really old. Greenpeace made sure nuclear power was shut down and we burned coal for the last 50 years, but that happened back in the 70s. A lot of these reactors are getting old and they're going to be shut down. Sure, some of them are being extended, but that 450 is not a solid number. That 450 could slip. And they're saying, well, there's 50 being built. Well, okay, there's 50 being built. Let's say over the next 5 years, it's 10 a year. Do some math, 10 over 450. And that doesn't include the inevitable shutdowns of that 450 reactors, right? Some of them need to be shut down. It's low single-digit growth. So why are people so excited? Low single-digit growth. Who cares, right? And on the supply side, you don't think every single uranium producer is at these prices are cranking up production as much as they can, and they're looking at restarting all sorts of old projects they've had from the last cycle?
Yeah.
But
the cure for high prices is high prices.
Yep. And
right.
Uranium's not going to get away from that no matter how ESG everybody thinks it is. Remember, I'm optimistic on uranium power I was a big uranium bull at 17, but at 85, how can I be a big bull? I can't be a big bull. I can be optimistic or think it'll hang here for a while before it collapses. But the only bull case there is, they're saying, well, Warren, of that 180 consumption, there's only 130 production. So there's like 40 or 50 million pounds that are made up from secondary supply. And we're convinced this time that we're done, that secondary supply is over with. And I'm going,
well, they've been saying that for 20 years.
Yeah, well, I lived many years of that. So all I know is, where have all these pounds come from? Where have the 130 million pounds come to feed the speculators? And what the best you could do, like 2 years ago, I was at a panel, which I'm sure I won't get invited back again, but uranium was 50-55, and they're going, Warren, where do you think it's going? And I said, well, it's going higher. I'm bullish on it. But I got chastised because I wasn't a Super Bowl saying 200. It's going to be just like last cycle, $200. I said, it's stupid, man. Like, if it does get anywhere near that, you sell everything you possibly have.
Yeah.
And
I want to make that comment about like the easy money's been made, but it's not easy to sit on those positions with your conviction for a long period of time, which you have to do, being chastised by everyone saying you're an idiot.
Well, that means you feel good though.
But it goes on the top too, right? Like you're out there banging the table, say, guys, this is over to some degree, and you're getting yelled and screamed at, and you have to, you're responsible for shareholder money, your capital, family money. You have to take all that and do the responsible thing with it, and it's hard.
Well, how's this?
Getting right? Like
I'm making fun of uranium.
Yeah.
Although I love nuclear power, I'm making fun of uranium. Yet I love met coal. Talk about a commodity I love that everybody hates. I love met coal. It's fantastic. Can you imagine? Well, I'll give you an example. Met coal. Here's another example. When was the last time you were approached by a junior trying to raise money for met coal exploration? Never.
Well, no, it would probably 18 years ago, actually.
Yeah.
18 years ago.
Okay, so and what do you think the Indians are going to do with steel production over the Indians, one of the largest consumers of met coal? What are they going to do in the next 10 years to their steel production? They want to double their steel production. That means double their consumption of met coal. Nobody's looking for it. They're doubling their consumption. Like, compare those numbers to the growth in the demand of uranium. And so if you wonder why I'm bullish on met coal and not as bullish on uranium, and uranium, all we're going to get here is at best is a short-term spike. It might, I don't know how long it could last for. It should have already happened with all the Super Bulls who were beating me up 2 years ago. But anyways, we're at 85 bucks. And I go, as I say to some of my uranium bull friends, I go, are you guys nuts? I go, 85 bucks, is that the best you could do after throwing 130 million, taking 130 million pounds out of an illiquid spot market? 85 bucks, is that the best you could do? Come on. And that's where we are today. And
yeah. And
then
so there's supply coming from somewhere.
Something's going on. It is not the, and you take a look too, I was making fun of all these fission guys. I was going, you idiots. I go, fission uranium, it got taken out, blah, blah, blah. I go, fission uranium was trading at higher than the current acquisition price 10 years ago.
Yeah.
And we've had a bull market in uranium too. And on a takeout, you're taking out less than what you were trading at 10 years ago. Well, that's real value added, isn't it? And so anyways, I don't believe any of the baloney in the uranium space, but I do own one stock, which is run by the former head of exploration for NexGen. You know, have you heard of District Metals?
Oh yeah, Garrett, of course. Yeah.
Yeah, Garrett. So Garrett's sitting on the largest undeveloped uranium deposit in the world. It's 1 billion pounds in Sweden. I believe by early next year they'll open up Sweden to uranium mining again, and that's what's happening too. As far as if anybody's concerned about supply, I see Australia opening up eventually. Brazil will be opening up eventually. Sweden will be opening up eventually. So all these companies that have banned uranium mining, a
Interesting.
lot of them already have drilled out uranium deposits. Like for instance, in Sweden, Garrett's sitting on 1 billion pounds, right? Like multiples of what NexGen has. It's low grade, open pit, a lot easier to mine. But
Was that a hard rock or an ISL?
Which one?
Garrett's.
Oh, it's a low grade open pit. It's in the
Okay.
black shale. In fact, even
Okay.
uranium is not the primary metal. It'll basically be a potash, vanadium, and uranium
Oh, interesting.
black
Okay.
shale. And then right next to them is the Hagen deposit, which has another, I think it's 800 million pounds. So you're looking at almost 2 billion pounds sitting there, right? And then, like I think the black shale will be very fascinating going forward to supply the world's uranium needs. But anyways, there's lots coming on, and I know stuff in Brazil, and I know obviously
Yeah, that makes sense,
stuff in
right?
Australia, right?
Yeah.
And then you look at the Olympic Dam expansion, may or may not happen. That'll be there's lots of uranium out there, and at $85, if it stays here, it's a lot of it's coming on, and it's coming at us, and so that's why I don't think long term $85 uranium is sustainable. Near term here, again, if the Super Bulls are right, and there's even a tighter squeeze, although they've tried to squeeze it, it hasn't worked. We could see possibly a spike. But if I was the head of U.S. Department of Energy, I'd say, okay, phone out my Canadian counterpart. You know these Sprott guys? Yeah, let's make them divest of all these pounds over the next 3 years, and let's pass some legislation which would ban all speculation on in uranium and see what that does to the uranium market, because if uranium did spike, they'd be under pressure from the utilities saying, how do you let if uranium is so strategic, how do you let speculators corner the market and jam it up and make it tough for us to buy it and have to pay so much more and pass it on to the consumer? How's that for a story to sell? Is that going to be a tough one? It isn't.
No, not at all.
So,
yeah, good. That's a really good point.
Yeah. Anyway, so I'm move on, guys. With uranium, just move on. You can tell the market, the share prices are dropping because people are moving on, right?
Yeah.
Pretty simple.
Perfect way to end uranium. Let's touch base on gold quickly here. I'm a gold bug. You could have the same argument, right? I've been a gold bug forever, and now we're kissing $2,400. Gold stocks still aren't moving. Interest rates coming. What do you think gold needs?
After, again, many, many decades of looking at this, I am a bull on gold, permanently a bull on gold. Am I a super bull? No. Am I a $50,000 a pound super bull? No, I'm not. I'm a bull on gold. And the reason I'm a bull on gold is I know politicians. And as you well know, they just print money and lie. Yeah, print money and lie. Yeah. So the price of gold is going like this as they just print more and more bullshit fiat currency, right?
Yeah.
So and whether it goes up or down, or there's a band, there's a band of highs and lows, and there's a midpoint, there's a mean reversion. And so long term, you're gonna get a movement in gold. It's always going to go up. And in terms of, the US dollar, like if they don't have a monster financial crisis here in the next decade, I don't know what'll happen. But you do know the history of gold and how, I forget who it was it Roosevelt, whatever president, banned personal holdings of gold.
Yes.
There's strong precedents in banning a lot of things. I remember I was shorting Morgan Stanley in 2008, and then the US government banned shorting of financials. And going, well, that's a new one for me.
Well, what's next, right? The Trudeau government's going to ban owning anything on the TSX Venture Exchange.
Who knows? But these printers of fiat currency, they have a habit once in a while banning the ownership of gold. Now, why? So I'm bullish on gold without a doubt. There's no way I'm wrong on that, because politicians control the printing press and they always print. And you look at
they don't care, right? They don't care.
Yeah. So
So,
gold's going up, and gold will
yeah,
always go up. And even and you look at some of the central banks are buying it, and so anyways, gold's going up, and it
yeah,
always will.
yeah,
So why are gold equities not going up? That's an interesting one. I guess people have certainly the big capital that it would take to move some of the big guys. They're looking at other things, right? Look at
yeah.
the performance of the S&P 500. They're under. See, when you look at the big portfolio managers, big money managers, and I'm a portfolio manager, so I understand a little bit of the constraints they're under, but I have a longer term perspective than a lot of them. But imagine you're running $10 billion in the US and you're looking at the S&P 500 rocketing, and so your peers are your peers are buying the S&P 500 and you're buying gold stocks.
Hmm.
And you're
With
going,
one tenth of the liquidity,
yeah, I'm
right?
going, well,
Too as well, and yeah,
yeah, how long will I have a job if I continue to bet on gold stocks here? Because I get judged quarter by quarter, right?
yeah,
And
yeah,
if I sit in another performance meeting with my boss, okay, I've had it with these gold stocks. I'm getting out, and I'm buying the S&P 500, or I'm buying the FANG stocks, or whatever you want to talk about. I got to get in with the party, and that leads to a little bit of the cyclicality in our business, right? People chase the new shiny object, right? It's just yeah. So I think that's what's going on now, and we need not unlike I think in the early 2000s, we need mining in metals and gold to be the best option out there, and right now it's not because
it's one of our foundations of the Canadian investment landscape. Like it
yeah,
just is. It just feels so broken right now. And
because
like
it is.
I don't know. Like I question that. Like, is it that broken, or are we just do we forget and how bad these bear markets can be, and just did we feel the same way last time and go, oh, it's broken, and find all these other excuses, but really it's timing. Like I don't know the answer. Like I've only been through a couple cycles. I've only been doing this for 25 years and I don't know the
Yeah,
answer, but like it just makes me think about those things. Right.
yeah.
So
There's this is a down cycle without a doubt, and this is how you feel in a down cycle. And that's why you should be buying. But there are a couple things that are a little bit different and working against us here. Is what we have happening in the junior resource market, and you've probably heard about the Save Canadian Mining guys, right? Like,
of course. Yeah.
yeah, so you have a bunch of negative trends really hurting the mining business, but I see some of them turning. For instance, you take these hedge funds that don't do any fundamental work in mining. They know mining. The CEOs blow money in mining. So what they're doing is they're running around shorting every single junior out there, and they're doing it through setting up entities in Germany, doing it through Germany, so you don't have to report. In some instances, you don't need to even borrow the stock, and they're shorting the stock in advance.
Then they offer money.
Then they offer money, and the guy goes, well, he looks around, the stock's down 20%, and he's going, well, who wants to put money into a stock that's just down 20%? Well, you'd be lucky if you get your existing shareholders, but then in a lot of instances, they're stuck taking that hedge fund money. And so that's been going on for a number of years. That has not helped the sector. The other one that's been going on is this nuttiness of the Trudeau government with this, oh, you cannot sell to the Chinese. Well, how many Western companies have bought copper projects in the last 10 years? Not many, right? It's the Chinese that are buying the copper projects. So if you're out there with a copper junior, and it takes a lot of money to drill out a copper porphyry, and then you get this beautiful copper porphyry, and the Canadian government says, no, you cannot sell to the Chinese, or you can't even take an investment. You saw what happened with Solaris, right?
So there's no exit strategy basically for like
Yeah,
the real money that needs to fund these projects to get to that valuation.
Yeah.
Then they're saying there's no exit strategy.
Yeah.
If you can't have an exit strategy, you're not cutting the check.
Yeah. So would I invest in copper exploration, especially porphyry copper? No. No. Why bother? Why bother? It takes way too much to drill it out. And then and even if the Western companies did want to buy your stupid copper porphyry discovery, you've got no competitive tension from the Chinese. So they're not going to pay fair market value. You're rotting on the vine because it's just Rio Tinto, BHP, and a couple others that'll could even buy your company. So, we'll just wait another year and let you rot on the vine.
Just wait until you fail again, right?
Yeah.
So that's a cycle we've been in for a long time. Yeah. It sucks.
So unless you have the Chinese there to add some discipline to the market, there's no need to invest in copper porphyries, in my opinion. And that's why I think we're destroying the Canadian mining industry, because any copper, let's say that you have a passion for copper porphyry, you think you have the best copper porphyry target in the world. You don't want to be anywhere near the TSX venture. You don't want to be anywhere near Canada. You don't want to have any ties to Canada. You want to make sure your company is domiciled anywhere else. And I've heard recently that a lot of people are domiciling in the UK, for instance, because they don't have the same stupid rules we have here. And whether you're listed in Canada or not, we don't know whether the clowns at the Trudeau government will shut you down. So you're chasing our Canadian miners out of the country. So you got the hedge funds beating up the crap out of everybody, hurting performance so people don't have money, and blah, blah, blah. And then you have the Canadian government pounding the crap out of you, saying you can't sell to the Chinese for whatever reason. Like, I don't know what these guys are thinking. You know, how many, you buy an air conditioner made in China, you look inside, it has a bunch of copper, and you're just going, so we're stopping the Chinese from getting this copper to make our air conditioners that we buy. Okay.
Yeah.
Okay, so we're going to stop the Chinese from buying these copper projects that we don't have the desire or expertise to buy and operate. Okay, there's no sense, no life. So that's destroying the Canadian market. The shorters, then you have the third one where the banks are destroying the Canadian market, which we didn't have in previous cycles, which is basically they're running around with these stupid trading algorithms that are scalping retail investors every second you get, right? These bots that have preferential access to the market. So you try and lift an offering and boom, you didn't get it all because a bot jumped in front of you and scooped some of it. So you take those three factors and you wonder why we don't have a booming Canadian metals market. That would be three reasons.
A good place to start. Yeah.
And then you look at Australia. I'm not an expert on the Australian market, but they don't have many of these issues. Or they may have some of these issues to varying degrees. So how would I fix them? It could be fixed pretty easily, which is we got to stop the nonsense about not selling to the Chinese, first of all, unless we had, so that would be the first thing. And then we got to stop these bots from trading small cap stocks. That would be another one. Just say, listen, put a set of market cap limit. The bots can't trade anything less than $1 billion market cap. That's an easy one. And then we
shouldn't be allowed to short stocks, period, under a market cap, like a certain market cap or a certain liquidity.
Well, the other thing too we've done, which is different than the 90s, is we used to have just an uptick rule. You could only short a stock in an uptick. Now you short at a flat or a downtick. So everything's set up for the shorters to destroy our market. So there you go. How are we going to be successful? And the only way we're going to be successful is invest in good, solid, decent companies that are going to make money. I have one instance where I have one of the companies where I fully believe, like, we keep getting pitched a deal, and I keep saying to the CEO, I go, don't worry, come to me if you need the money. Don't take their deal. And the deal I am 100% sure of is guys that are trying to cover their shorts, but it's reasonably liquid. The stock's going up like this, and they want to cover. And we're going, no,
not good for you.
I'll give you all the money you want. And let's see what happens here. But so if we did have a big discovery, a monster win, big discoveries, and laid out a few of the shorts, maybe, or for instance, the other thing that would really kill the shorts is if we did have a big allocation of capital to the Canadian market, they just overwhelm the Canadian market. And anybody who's short a lot of these illiquid stocks, if you're short 20 names, maybe not all of them will go up, but you could get destroyed with 3 or 4 of them going
very
up
quickly.
Times, right?
Yeah, very quickly.
So I don't know how it's going to end, but it will end.
Yeah. Warren, thanks for your time, buddy. That was awesome. Really, really fun chat, and looking forward to catching up with you again here soon.
All right, Arlen, you be good. Take care. Cheers.
Yeah. Take care, man. See you later.